Welcome to the DARTS Allowable Revenue Wizard video tutorial. This is the farm description, the second installment of the DARTS Allowable Revenue Identification Wizard tutorial video series, which covers the animal intended worksheet, the supplemental information for intended farm operation report, and the intended farm operation report. Beginning at item number 4 up here on the navigation bar in the farm description section, we are presented with a screen containing the question, do you intend to produce any livestock in the upcoming insurance period? If not, select No to continue through the wizard. For the purposes of this tutorial, we will assume that we do intend to produce livestock. So we will select Yes and hit the Next button. It takes us to the Animal Intended Farm Operation worksheet. Indicate what type of animals in the commodity drop-down box that you intend to produce. In this example, we have stocker steers. If you have questions about these specifications, hit the F1 key or click on the Explain This link that addresses the specific topic. Here, we have 5 steers with an average weight of 740.88 pounds and $1.16 per pound average value for a total cost of $2,932. The total value and net value amounts are automatically calculated. If you click the Add button at the bottom, you can add additional categories of livestock. Let's say we also plan to produce stocker heifers. We also have 5 of these. By tabbing through to the next item, Quantity Unit, we receive a prompt saying that if we change the unit here, we also change the unit in other instances of this commodity like this. See how it changes the selection above? Therefore, we'll leave our units as head and continue to the next item. We have an average weight of 690.9 pounds, and we see the same prompt as before, so just hit OK to continue. We have an average value of $1.22 per pound, and we have an investment in them of $2,932. This completes our Animal Intended Farm Operation report. Let's hit Save to record our progress, and then Next to continue through the wizard. Note the expected revenue we just entered from our Animal Intended Farm Operation worksheet is already appearing in the upper right-hand corner of the screen. On this screen, we are presented with another question. Do you intend to produce any nursery plants, Christmas trees, citrus, commodities with a marketing order reserve, i.e. raisins, or commodities sold with the co-op retainages in the upcoming insurance period? If not, select No and hit the Next button to continue through the wizard. In this example, we are going to select Yes. So if we select Yes and hit the Next button, we are taken to the Supplemental Information Worksheet for Intended Farm Operation Report. Because the WFRP program excludes nursery, Christmas trees, citrus, and commodities with marketing orders and co-op retainages, we need to plug them into this worksheet in order to back them out of our expected allowable revenue. So let's say we plan to produce nursery plants, and specifically boxwood shrub. We're expecting to have 150 1-gallon containers, so we should enter it like this. We are going to use wholesale marketing method with an average per unit value of $3.50, and our total expected costs are $300. Let's say we are also intending to produce a second type of nursery plant. We'll go down and hit the Add button and select Nursery, F, G, and C from the commodity drop-down again. The second type we are producing is the Indian hawthorn shrub. We are expecting to have 200 3-gallon containers of these. There is our unit prompt again, so let's just hit OK to continue. We're going to use the same wholesale marketing method with an average value per unit of $6. Next, let's also assume that we are going to produce navel oranges, but using 2 separate marketing methods. We will begin to create this scenario by, again, clicking the Add button at the bottom of the screen and then selecting navel oranges from the commodity drop-down. Our plant type is going to be 12-year-old trees. We are expecting under the first marketing method to produce 150 boxes of oranges. You will notice that the container size and age box is grayed out and inactive here. This is because it is only activated when certain commodities are selected, like nursery F, G, and C above. We are going to select the next year crop / revenue in insured year marketing method selection for this entry. We are predicting a $9.60 average value per box and a total cost of $0. Now let's hit the Add button once more and select navel oranges again. These two are 12-year-old trees. We are going to have 900 boxes of oranges, except this time, let's say we are using this year crop / revenue in insured year marketing method. Our average value per unit for these is slightly higher at $9.80, and again, a total cost of $0. The check boxes and the remove button works the same in the previous screen, and let's hit the save button down there to store our progress. That's it for our example for this screen, so click the next button and you'll be taken to the intended farm operation report. Again, notice the change in expected revenue amount above. Now at the intended farm operation report screen, if you have made any entries on the animal intended farm operation worksheet screen and/or the supplemental information for intended farm operation report screen, the summarized values for these screens appear automatically here. Notice that our individual entries of the same type of commodities have been combined to form one line item each. If you want to know more about how these values are calculated, you can click on the Explain This next to the Total Value box. For these pre-populated items, we only need to add a value of the number of years produced field. We are going to assume that we have been producing stocker cattle for 10 years, nursery plants for 4 years, and navel oranges for 15 years. By clicking the Add button on the bottom, we may add additional commodities that we intend to produce that have not been accounted for. Let's assume that we also intend to produce cut flowers, and that we have been producing them for 6 years. Let's expect to produce 18 acres of them, and we have an expected yield of 46,071 stems per acre. Looking at the list of unit selections here, we do not see stems, so we just use the other instead. Finally, we have an expected value of $0.165 per stem. However, let's assume that in these 18 acres we grow 2 different kinds of flowers. We are expecting a higher value for one type than the other. To handle this situation, we click on the blue Detail button on the left. Let's say that half of the 18 acres you split between 2 types of flowers. So go down to the bottom and hit Add button so we can now have 2 entries for the cut flowers. Go to the Quantity box and change 18 to 9 acres. Our units, yield, and value remain the same for this one, so go to the line that we added and put 9 in the Quantity box for it also. The units do not change, and we are going to assume that yield is going to be the same as well. However, our expected value for these is going to be higher at 20 cents. Now we'll hit Done, and we are returned to the intended farm operation report screen. As you can see, the 2 cut flower entries have been combined into one line item. Now let's add a couple more commodities to the list. We can also produce corn and have done so for 15 years. We intend to plant 1,850 acres with an average yield of 180 bushels per acre at an expected value of $4.70 per bushel. Now let's say we also produce asparagus and have done so for 20 years. We intend to plant 240 acres of asparagus and have a yield of 2,900 weight per acre with an expected value of 125 per hundredweight. Finally, let's say we also produce walnuts and have done so for the past 15 years. We have 25 acres of walnuts and a yield of 1.7 tons per acre with an expected value of 2,300 per ton. Something that I would like to show you that exists on this screen is a feature that prevents you from adding the same commodity twice. Let's try to add corn again. See how it doesn't let you? There are many helpful safeguards throughout the wizard like this one to prevent potential errors in data entry, so be on the lookout for them. So that's it for the intended farm operation report. Let's hit the next button to update our expected revenue value up here. Be sure to hit the Save button to record our progress, and that will conclude the second installment of the DARTS Allowable Revenue Identification Wizard video series. To continue the tutorial, please select our next video titled DARTS Allowable Revenue Identification Wizard Video 3, Tax Return Entry and Conversion. All tutorial videos may be accessed on the DARTS website at www.agrilogicconsulting.com/darts or on YouTube.